presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about whatever you focus on grows up. Everyone's having a great day, safe day. Let's make it a great week, folks. Let's make it a great month, man. Kick into month. Cinco de Mayo coming up, man. I'm going to like it. Be impeccable with your word. Replace fear with love. The human mind is like a fertile ground where seeds are continually being planted. When you're impeccable with your word, your mind is no longer a fertile ground for the words that come from fear. Your mind is only a fertile for the words that come from love. Market-wise, let's take a look at it out here. We have the Dow Industrials down 307, NASDAQ off 38, S&P's down 43, gold contract down, where are we? Down $50.80 at $18.60 an ounce. You got silver down 53 cents, $22.55 an ounce. Light sweet crude flat, $105.12 a barrel. Notes and bonds. The 10-year note trading down 27 ticks right now at a price point of 118.09. 30-year bond down a full point plus 26 at 139.04. And King Dollar. King Dollar's up 612 ticks trading out at, whoops, 1 second. That's not King Dollar. Where are you? Oh, there it is right there. Up 754 ticks trading out at 103.713. The euro is at 104. The yen is at 130. And the British pound is at 124 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do we have? Well, the bottom line, I'm going to bring it on a weekly right now because you got an S&P on a weekly, well, I don't even have to do it on a daily basis on the S&P. The S&P, what it did on Friday, bottom line, you broke the B point. You broke it with volume. You're at 408. That's an confirmed ABC structure down to 394. Now, when we take this and we put this up on a weekly and we go hunt for 394, that low there is 437. Yeah, see how this is setting up? This is setting up going to the next leg down, level down. That brings you back to February of 2021. And you can see that little volume right there, man? What happens when, depending on how long you've been listening, when you start going down, folks, you just look down to the bottom. Look for these high volume bars because, it doesn't mean it'll hold there, but that's your ABC structure on the way down. That's where I expect you're going to go, and we'll see what kind of juice is down there. What we don't want to see happen, meaning that, if you want to see market stabilize or go higher, is the building of cause. So what happens when you build cause, folks, okay, is that's when it's building energy for lower prices. It's a real problem. Now, let's go take a look at the Qs. The Qs right now, they're on a weekly ABC down, which is a disaster, okay? The Qs right now are trading up 44 cents. They blew away the B point. They blew it away with volume. That's a 281. A to B equals to C to D. We had volume out here, 510 million. You blew away whether it's the 381 or the 414. So we take a look at 281. 281 is all the way over here going back to April of 2020. That is going to be pretty intense if that's where we go. Fast, furious, but guess what? That's where it's at. Gold contracts, no better, man. Gold contracts is an ABC structure down too. It's taking the B point out today, taking it out with volume. You got 178,000 contracts here. You're going to see that you get your A point is set up at this 2003. Your B point is down at the lows of last week, which was the 1870. You had 177,000 contracts, 171,000 contracts. We're already at 178,000. That sets up a 1788 contract. A to B equals to C to D. And you can see that's at the lower end of its consolidation. That'll turn into a consolidation. That's what a lot of the actual gold equities have been doing. They're going back to the bottom of their consolidation. Now, we take a look at the note and bond market, what you have out here today. With the 10-year down 28 ticks, the 10-year did hit 3% today, folks, 3.002. Now, what's really going to be wild is that, let's look at this thing. Okay. So, that's volume of 1.5 million. Okay, so you're going into the low, but you're going into the low not with volume right now. 1.5 we're going into. That low is established at 118.08, and that's exactly where we are right now. So we'll see. If you close out here, then it's not going to be great. That meaning the bond market. Because you close out here, that's saying, hey, guess what? You're still going south. You haven't basically tested that number, and that's a problem. S&Ps, as we're talking right here, they rejected. They were only down 24 right now. This is pretty cool. They were down 70. And you can see that what ended up happening, folks, is that the last thrust down today, it was quite a thrust, man. I mean, this thing went down into the price point of 4,056. And bottom line, you bounced off it pretty quick. Now, when you bounce off something like this, it's going to be 4,000. See this when you come down here? Now, watch this. If you're watching Tiger TV, 4098 is going to be the number to keep your eye on. Now, we just got to get into it. We're at 4109. These two bars are the bars they got to get into. And when I say that, I mean specifically, you not only got to get into that bar, you need volume into that bar. Because what will end up happening is that if we don't have the 10-minute volume into that bar, it will just give it up. And right now, we'll see how this shakes out. But right now, what is happening is that the number doesn't look to me like you're going to have it. We got plenty of time, though. You got 6 more. We have 6 more minutes left to see how this operates in this bar. If at the end of this 10-minute bar, if this thing closes, under this 4098, oh, man, get out of the way. Because all that means is going to go right back downtown. And this is the danger part of when you take legs down. Because what ends up happening is you take a leg down, and if it wants lower price, you'll go sideways. You go up and down, go sideways. That's building cause for lower price. You get the energy going again. And guess what? Go south again. Dow Industrials right now down 143. NASDAQ is up 46. S&P's down 18. Stay right there, folks. Come right back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 174. You get the Nasdaq up 34. S&P's down 23. Let's get over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, it's very easy to get Steve's newsletter. Come over to our website at TFNN. You're going to go right under newsletters. You're going to see Mastering Probability on the right-hand side. You just hit that subscribe button. You get Mastering Probability for 1 month for $149. You get it for 6 months for $695, which is a savings of $199 or 22%. And you get it for 1 year for $1195, which is a savings of $593 or 33%. Now, they all come, folks, with a 30-day money-back guarantee. So come over, check it out. You'd certainly get a market, you know, good, bad, or indifferent, man. We get a market out here, and you're going to get some great action. What's happening, brother?
That's an understatement.
That is an understatement. There's no doubt, man.
I mean, you blink and you can miss it.
Look at that. We were down 70, and now we're down 14 on the S&Ps. That's a fact.
And look, as you have shared with folks for 2 decades plus out here, for you rely so much on swing points. And, what we've got going on right now in the ES Mini right now, which you were talking about. And I've got a presentation ready like I normally do, but I just thought we'd switch over here, take a look at the ES Mini. I would share with the folks what it is that I'm looking at here, just so they can understand at least what's going on play-by-play, intraday.
Absolutely.
And so on the daily time frame chart, as you pointed out, we're testing that February 24th low, that 40.94.25 level. Half an hour looked like we were going to blow through that, right? So you never know until the day closes, which is why you don't want to look too far in. You don't want to make a decision about a daily time frame chart until basically the day is almost over. But we do have these intraday time frame charts that I have up on my screen, and they can help lead us to understanding what might take place on larger time frames. So, for example, in the upper right-hand corner, Tom, this is a 30-minute time frame chart. I'll just expand it out for the ES Mini. And one of the patterns that I teach subscribers, so that folks that subscribe to the newsletter service will learn this pattern, so that way it's not foreign to them. And it's a great pattern for helping identify tops and bottoms. And right now, you've got what I refer to as a Rhodes Momentum Indicator bottom. It's when price gets stretched, in this case here to the downside, that's not being confirmed by the technical patterns. And the way that we wait for a confirmation that this pattern is going to take hold is we wait for some type of bullish reversal candle. Well, right now we've got a gigantic bullish reversal candle going. Still 10 minutes left in this bar here, but we're going to get a 3-river morning star. So people should just anticipate, at least overnight, is the bounce here, the 30-minute chart. Tom is suggesting we should get up to the 41.44 level, maybe even 41.54. If price closes above 41.54, you'd expect a further rally in the overnight hours. So that's the 30-minute time frame chart with that bottoming signal as we speak. Here, as we shorten this up, we have the same type of bottoming signal on the 60-minute chart, and its next level of resistance, which is at 41.32, basically, Tom, that's going to come up first. So if we see a close above that, then that suggests getting into that potentially the 41.54 level. I don't have any bottoming signals. I have bottoming signals on the 4-hour and 5-hour chart, but they still need more time to complete before I would make a call there. But they're also showing the same type of bottoming pattern that we looked at on the 30-minute and the 60-minute. So that's kind of like the quick play-by-play as to what's going on, what folks should observe and pay attention to overnight. Any questions about these charts? And or before I switch over to the presentation? Oh, okay, perfect. Perfect. So you were in the midterm election cycle. We haven't talked about these charts for a while. And the interesting thing about the midterm cycle is that May is a real underperformer. So, what we were looking at in the markets just a half an hour ago was kind of like, oh, boy, this is like right on schedule. And this is the midterm presidential cycle if we go all the way back to 1898. And what I've got highlighted here is the month of May, which you can see. So over this time period, but May and June are really typically during the presidential or the midterm cycle, Tom, they're basically awful. And this is obviously a very long-term chart. So if we shorten it up a tad and we come to 1958 out here, we'll still see that the same pattern exists with May and June and even April here being, which we had a very poor April, obviously, being bad months. So it's all the reason to not get too caught up into the intraday stuff that you and I just looked at, but trying to understand the larger pattern that's out here. If we look at a presidential cycle that takes us just for the last 2 decades, 1982 through 2018. It's kind of a flat market out here. Nothing to write home about. But if we take a look at the chart up here, you can see that this is suggesting, from May continuing to head lower into the July, August, September, October timeframe out there. And if we look at a very short seasonal cycle out here. This is from 1998 to 2018 out here. So basically the last 2 decades, we can see May and June have just been horrible performers. So that's something that we really need to be paying attention to. We're just right now, it appears, to get a counter trend move. If that changes, then we'll come back and take a look at things. So May and June are typically very poor performing months during the midterm election cycle. So that's something that we all have to look forward to. And talking about swing points. So I've had to redo these charts. So Tom, I start doing this usually in the morning when I do a update with you. And so I did it early this morning. Then I changed it again at about 12:30. And then I'm scrambling from 2:30 to 3 because of the price action to say, okay, I need to change up the charts just a bit. So right now I think that the S&P, I'm not sure, I know where the ES Mini is, but is the S&P also rejecting that the February 24th low? Which is around 41.14.
Yes, we are at. Let's see. Yeah, it is. It is.
So right now you got to save. But folks, if we get it closed below 41.14, doesn't matter whether it's today or Wednesday or Friday or next week out there. That's just when you bust through a swing point. And I've got a couple of swing points out here with these red arrows. March 3rd, March 18th. Those were that was a swing point. Well, March 18th was when the swing point was when price broke through that swing point out there for March 3rd, and that led to higher price. So it's the reason why we're watching this 41.14 level so closely. So right now we might have rejection, counter trend rally out there. If I take a look at 7 of the 9 indices that we track, and this was the chart that I was really changing because this morning it didn't look as bad as it did a half an hour ago. And a half an hour ago, if we take a look at these indices, the Dow, the S&P, the NASDAQ 100, the New York Stock Exchange, the semiconductors, the Russell, the trannies out there, the Wilshire 5000, NASDAQ Composite, 7 of those 9 were trading below swing points. So just really adding to that midterm seasonal cycle pattern, Tom, where we should expect or anticipate that the markets are going to move not lower. Not that we're not going to have maybe some rip-your-face-off rallies, but things are just simply not looking good out there. So here's the Russell 2000. It's broken through its swing points. Now I don't know where it's trading right now, but this has the potential to actually form a bottom between now and Wednesday out there. And that would be a TD9 count pattern. That's something I also teach to subscribers. So today is going to become bar number 8. And on the low of the pattern, it needs to form on either bars 8 or 9, or the bar following 9. So right now, this has the potential to generate a bottom signal. The semiconductor index, even though it broke through those swing points, last week on Thursday, I believe it was, it formed a 3-drive to a bottom pattern. But its bounce might only take us to resistance, which is 245.03. That's the top of its daily profile out there. So, as you say, we've got markets out here, and this is a fun time to trade from a technical standpoint. May not be that fun from a
investing standpoint.
Yeah,
right.
Right. I mean, we could be in for some real trouble here for the next couple of months.
Yeah, it's really intriguing, Steve, how that May and June was so consistent over that many years, man. That's
exactly.
Meaning in that mid-cycle. That's
yeah. When I started looking at this morning, I was like, why did I wait this long to go look at those?
It's intense, man. Right. Listen, folks, come over to our website at TFNN. You're going to see a hit newsletters, master and probabilities right on the right-hand side. Hit that baby, and you are off to the races. Steve, you have a great one, safe one. We look forward to the show tomorrow.
If you want to take advantage
Thank
of
you.
this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Where are we? Dow Industrials right now are trading, let's see, are we up or down? Okay, down 14, Nasdaq's up 108, S&Ps are up 2.5. Now let's go over to the GDX because we have some questions about the GDX. Bearer of a bad news out here today, man. GDX, this is also an ABC structure down. This is a tight one, okay, but bottom line it is. So what happens is this. So watch this just for a second so you can kind of figure out how this goes. This is how I do these ABCs. Now, this is a close one because what happens, I'll walk you through how this goes. We had come down, and you had come down with 38 million shares, and you got to a price point of $34. Then, bottom line, we went topside to 36. And then you come down again, and we came down again, you'll earn 15 million shares. So you can make the point that, okay, hold it, that one is too close, meaning the one when we had come down on the 25th with 38 million shares should be used as the B point on the way down because it had higher volume. And I do that a lot, okay? The reason I'm not doing it this time is because the gold contract itself is breaking a B point and breaking it with volume. So that's telling me that we got a 6.8 A to B equals C to D that can get you down to $30. And where you're at that $30.50, you're going to see that a lot of these equities, that's how they look like they're going to go. I mean, Newmont's not an ABC down, okay? Bottom line is that it's off its high of 86. You're at 72. That's the largest weighting inside the GDX, so that's going to hold it up a little. The second largest weighting, however, is an ABC structure down, which is Barrick. It's hard to comprehend why Barrick's having such a hard time, but the bottom line is it is. The same type of setup, meaning that you're taking a pot of B point, which is 16 million, you get 22 million. This one, your A point is 20, almost 26. Your B is 22, so you get $4, which brings you down to 18.90. And you can see you get some big strength down there. So, hey, we'll see where this baby goes, but that's how this seems to be set up. And if we go over to the dollar, it's going to be about this dollar, because when you look at this dollar, how this baby is set up, the top of this, this is no doubt where it can fail, okay, but it hasn't done it yet. And the longer that we stay up at these levels, the higher the probability that you can really launch these levels. And this is pretty intense, man, because I could actually bring it back 50 years. Where do you see this? No, 30 years. I'm going to bring that back 30 years. Because where this is going, this is what's really strange, too. So look at this for a second. So you can see that if you break this area, if you break the area of the 103.820, the bottom line is that what's game up here is the 120. Now, the thing that's kind of wild about this, really wild actually, is that when the dollar did go up, I really don't remember all the way back to 2000. Well, I'm talking, when I say remember, I remember 2000, but I'm talking about explicitly, was the dollar also jacking up the market? Because you can see what has happened here, is that the acceleration up was very fast, too. There's no doubt. You go down in October of 1999, you're at 96. By November of 2000, you're at 118. And bottom line is that my take, this is what I'm saying in particular, folks, is that when the dollar got that strong, forget what the NASDAQ did. I mean, the NASDAQ, just croaked beyond belief. And we'll see where this shakes out. But there's a lot of currencies, particularly the U.S. dollar, that's overtaken everything. I mean, let's go to the euro and take a look at the euro for a second. You're going to see the euro right now. This is trading at 105. Last 3 months, you're down from 114 rather, sorry. And then if we take this and put this on a monthly, what you're going to see, well, it's set up the same way, yeah. If this euro breaks the 103, you're going to be down at 88. Man, oh man, that's a trip. And we go to the yen. We take a look at the yen. The yen's hanging here at 130. And we pull this baby up and put this on a monthly also. You're going to see that we already overtook the 125. Next swing point is the 135, man. And these wide price bars, when you get a wide price bar like that, it's saying, hey, man, that's where it wants to go. So these currencies are not only moving things around, but they can be fast and furious in a monster way. We go back to the, what's interesting here, we go back to the silver market. Now, silver kind of was ahead of itself, but hasn't got smoked as, well, the equities in both cases haven't got smoked as much as the actual physical metal has. What you have here in silver right now, you're down 48 cents. You're doing 52,000 contracts. The lower end of this consolidation is 22.10. We hit 22.13 today, or 22.16 60 right now. If we go to the SLV, we take a look at the ETF for the silver contract. So the last swing low had 28 million. You're doing 35. That's not cool, man. That's not cool. That's telling me silver can actually get down to $20 to 1980. This move today has way too much volume. You get 35 million shares. You're going into 28 million. Now, you're also going into 44. The top of 44 is $20.46. Oh, that might be it. If we get a rejection, okay, so watch this. This gets interesting. You get a rejection there. That number to keep your eye on is 2084. We go take a look at the GLD. Now, so the GLD versus the GDX, okay, bottom line is the equities. The GLD trades at 10% of the price of gold. Well, what we're going to do right now is just going to go over and look as to, how much volume they have. Well, this is an ABC down. Yeah, see, this is a correlation. This is a direct correlation. This is an ABC down also. You broke the B point. The B point on this is 8.85 million shares. You're doing 11 million. Yep. And that one there would take you from what? 186, 175. So you got $11. That's 167. Where's 167? There's 170. Last low out here is 166. This isn't, they're throwing everything up. That's the bottom line. Lock, stock, and barrel. It's sell, sell, sell. Pretty intense. There's no doubt about that. We go take a look at the TLT, what you're going to see. So we hit 3% today in the 10-year. That being said, guess what? What is that? That's 26 million. We'd have 20 million. Okay, it's not an ABC down. We pull this back a bit. Put this on a monthly. Look at this disaster. So 112 is your next number, man. This actually, okay, hold on one second. This is a monster ABC down. Let's see how this lines up. Okay, so this lines up 172. $133. We get 39. That's one. Oh, we're getting close here. Yeah, because that would be 115. Yeah. Oh, this is good. Okay, it's getting close. So that means it wants to get down to the swing point there, which is 111. Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now trading up 60. You got the Nasdaq up 11. the Nasdaq up 172. S&P's up 12. Let's go take a look at a few of the banks for the Tigers and Tigresses out here. So if we take a look at Bank of America first, bottom line is that I wouldn't touch this thing. Okay, you're down from, $50. You're at 36. Pull this back. Put this on a monthly here. Okay, so. Whoops. Do it this way. Whoops. There we go. Okay, so if we put this on a monthly, what you're going to see is that you're coming back into, which is pretty amazing, pre-COVID. Right before we went downtown, that's $35. You hit $35.40 out here today. What I would do with this, okay, is the bottom line. Just hang tight, because I suspect what it's going to try to do will build cause, because if it gets into this level, meaning it gets into the level of 35, that's going to be big trouble, because what you do have is that the high of the lows, it's a high volume low, is $29.76. Excuse me, folks. So I suspect that's exactly where this thing wants to head to. Let's go take a look at J.P. Morgan and see how that's set up, because the bottom line is that these banks all trade together. J.P. Morgan right now is trading 120. We put this on a monthly also. Oh, this is already into it. That's interesting. Look at that. It was 141 pre-COVID. Yeah, I wouldn't be buying any of these banks yet. If J.P. Morgan's into this, and it's deep into it, because the highs, so check this out. The highs of the high volume low is 122, and it hit 118 today, we're 120. This needs a rejection of that 122 area, so I would stay away from it. Let's go to our man Frank in Gloucester. Frank, what's going on?
Hey, how are you, Tommy?
I'm doing great, man. Good. Yourself?
Yeah, not bad. Getting there. A little tired.
I bet you are.
Chicago this weekend, but we're home resting.
Oh, good. Yep.
So let's take a look at some nice soft commodities. DBA is a nice little agricultural ETF, and I'm in it, I hope, for the long term.
Yep.
I've been in it for a while. Today's candle looks a little funny. It's a swing low, probably, and I hope. But if you look to the left, there's at least 2 or 3 other swing lows that kind of come into play.
Yes. Okay, so let's take a look. So this is the DBA, folks, okay? Inside of this, these are all going to be futures that they have. Inside of this, you have corn, soybean, sugar, coffee, live cattle, Kansas City wheat, and then regular wheat. So when we take a look at this, the low for the year out here is 17.54. The high is 22.88. And as you said, Frank, I think this rejected lower price out here today. Yeah, it did. And what you have now, this is what's cool. This is how I really like to see a rejection of lower price, folks. You see the bar was going into that swing point. That swing point, 2184 was the high. That swing point of the low. So the high of the low, I'm looking at the trading day of the 29th of March. That had 4.2 million shares, folks. This only did 2 million shares today, and you rejected that 2184, because right now you're at 2198. Yeah, I would stay right there, Frank. I mean, this is not done yet. I'm
thinking about buying a little more.
Well, you could buy more for the next couple of days, because this is impressive that it couldn't even get down to that low out here today. Because what you do have is that, these commodities are getting, whacked around too. But food-wise, which is a lot of inside the DBA, and guess what? We don't need more dollars or gold or silver or all that, but people can't get away with not having food. So it looks to me like this, and what does happen, folks, in market runs, commodity market runs, that is, these things can really just keep, pushing in a monster way. And right now, this looks good, man. Yeah. You get a consolidation that looks good. And the cool thing about this, Frank, is also, because how we came down today? I mean, on this baby here, which is so cool, is because you just don't want it to close under 2140, period. And if you get that, then you have to, do some thinking about it,
Okay.
And hey, let me ask you this. How is the temperament in the Northeast right now, meaning economy-wise?
Oh, boy. Not so good. I guess I have to summarize it.
Yeah.
Prices are bad. Availability of things is bad. It's just messy. People are scratching their heads a lot here.
Yeah, no, I just wanted to get some feedback because what's so intriguing for all of us, folks, we happen to be in the market all the time, right? So what's cool is that when you're in the market, you see the market, then you see the economy outside. And, it's really tough, I would say, for people to actually see that things are starting to go south if they're not in the market. Because, all you keep hearing the stories, this is higher, but my take is exactly what you're just saying, that what has happened, folks, is this. Things are going higher, but all of us, it's like, oh, really? Am I really going to spend that much money for X, Y, Z? So as things have been going higher, the sales have been going down, and they try to, just kind of cover over that GDP number. That GDP number was insane. If we have inflation that's running, 8, 9, 10%, and then you got a minus GDP, I mean, it should be
and no real hope for next quarter to have it any better as far as I can see.
No, I agree. No, I think this thing is already started.
The supermarket today.
Yeah.
That's a pretty sad place.
It is. Especially the meat aisle. You go, that meat aisle, folks, I don't even eat meat, okay? But that, I feel so bad when I see people in families, they can't even, they're adding this stuff up and they can't even grab any meat because the bottom line is that it's so expensive. So, pretty intense, man. Okay, man, well, listen, you have a great one, a safe one, and enjoy that weather. I'm sure it's getting great up there now.
It's trying. Talk to you soon.
I love it. Okay, Frank, thanks, man. So, Dow, look at this. We're all green. That's the bottom line. Now, that being said, now watch this, folks. This is where this gets really wild because of the fact of, how we've been trading and how many points is down. And, you can see out here today, the bottom line is that the SPY just went positive. That being said, the problem is that you're already in a confirmed ABC down, and today's got high volume also. So that doesn't change the structure in my head, anyway, about where we are. And the NDX 100 is the same type of deal. Now, the danger in this is how I started the program off. This could be the building cause of the next leg down. The Qs, same way. You can see the Qs. The Qs have higher volume today than they did on Friday. We're already at 102. Friday only did 91. Stay right there, folks. Come right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow is up 94, NASDAQ is up 194, S&P is up 21. Let's go inside the NDX 100 first and see the strength versus the weakness. Strength, Align Technologies up 6.5. You got DocuSign up 6, Moderna is up 5, and you get Zoom up 5. Now, if we pull this back, this is what you're going to see here. This is what's wild about just markets in general, folks. We take a look at Align Technologies. All of these are the same way. These are dead cat bounces. Align Technologies is down from a price point of $712. It hit a low last week of $370. You're coming up with light volume. You have to go up sometime. Unfortunately, that's how these bounces take place, is that the worst stocks will bounce a bit. That's because, that's buy the dip, buy the worst stock, and, bottom line, we try to make some money. Taken away from it. Vertex Pharmaceuticals down 4%. You got PepsiCo down 2%. You get Dr. Keurig, Dr. Pepper down 2%. And you have Constellation Brands off 2%. Inside the Dow Industrials, we take a look at the strength versus the weakness. And the Dow had quite a turn. Well, the whole market had quite a turnaround here. Inside of point-wise, what we have, Microsoft is putting 44 positive points. Home Depot 42. Goldman 31. Taken away from it, you have United Health, excuse me, folks, minus 51. You got American Express minus 20, Amgen minus 17. Let's go to XP, American Express. Let's see what this is looking like. So that's down $3. Okay, so 4 million shares, 3.2. It's not an ABC down, but this wants the It's taking a swing point out with volume today. Yeah, it is. So it took its swing out with volume. This wants to get down and test the 166, and right now you're at 171. So the bottom line is that, you know, there's tough markets out here. That's the bottom line. So we have the Fed. The Fed starts its meeting tomorrow, 2 o'clock Wednesday, comes out with the statement, and we'll see where that baby goes. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 o'clock in the morning. Great show. Have a great one, folks. Have a safe one. Look at him, folks.